going to get started real soon. I know a few more people are being added to the webinar, but again, we welcome you and we'll start in about 1 minute. All right, good morning, everyone. My name is Daniel Karoma. I'm the Business Liaison Officer here in Montgomery County, and I've always been joined by my great colleague, Rich Simple from our Department of Finance. She's the Economic Development Manager there, and we welcome you to the Montgomery County Public Health Emergency Grant Program webinar. This webinar, we've been hosting these sessions for our business resource partners, our chamber partners, and other business groups who will be helping us in terms of not only to get the word out, to prepare businesses and nonprofits to apply for the grant, which, this is breaking news, will go live today. And we've been very, very grateful for all of you because the word is definitely out. Well, we're getting lots of responses, we're getting lots of inquiries. And we also thank you because you're sending people to this webpage to ensure that they prepare so that when the application goes live today, they'll be able to apply and submit a complete application. So with that being said, what is the grant? So out of the package that the County Council passed a few weeks ago, well, actually a few days ago, is a $20 million grant that was stood up for nonprofit and for-profit businesses that have actually actualized and they could demonstrate a significant loss in revenues. And we'll go into the details in terms of the eligibility. And these nonprofits and for-profit businesses, including independent contractors, sole proprietors, could get up to $75,000. And on top of that $75,000, there's an additional if there's an additional $2,500 for telework equipment that could be either hardware or software. So with that being said, there's been lots of updates starting as the day goes by, and we'll talk about those updates because we want to make sure that everything that you get is accurate, but also when you submit the application, that is complete as well. So with that being said, some folks have been, again, I'm going to the website. This website is public. So this is the link I just highlighted. And any of you can share this. You can go there and thank you, as I say, for those who have been sending your members or your customers, your clients to this website to check it out. And some of you have been actually submitting your emails here. And there was a question we received yesterday because there was another email that was provided earlier. And the answer to that question is yes. No matter where you've submitted your email, as soon as the application goes live today, you'll get an email that the application is live, and you can come back to this webpage. The application will be on this page, and you can submit and complete and submit the application. Okay. What just happened? Can you see the? Okay, there you go. I just wanted something. Just my page went on. Okay, so to apply, the eligibility based on the legislation that was passed and the executive regs that were developed. The principal place of business for the for-profit or non-profit entity has to be here in Montgomery County, or 50% or more of their employees have to be working in Montgomery County. And we considered, that these are full-time employees. Also, nonprofits and for-profit businesses that have 100 or fewer employees are eligible to apply. And again, the key here is that you have to demonstrate that you've incurred a significant loss in revenues as a result of the COVID-19 emergency that we're facing right now. So with that being said, I'm going to turn it over to my colleague, Ruth Simple, and she will go through how to prepare today.
Okay. I'm actually going to run through just a couple of numbers and some updates to some numbers.
Sure.
So Daniel talked a minute ago about, we're looking for a demonstration of significant loss. So we're going to collect some historical financial information. We're going to collect some current financial information, and we're going to calculate a loss that the business experiences. And it must be at least a 50% loss or greater to qualify. Okay. So keep that in mind. We'll be posting the executive regs on the website today if you want to walk through an actual mathematical example, but I don't want to go through that right now. But basically, understand we're going to be looking at historical information, current information, and calculating a loss based on that. We're looking for at least a 50% demonstrated loss in revenue. Okay, this is revenue that's happening now. This is not future revenue. We've had lots of questions about, well, if I had to cancel my project in June, does that count? It does not count today for this program as the bill's been written. We've also been asked, there is a component to this grant. It's a $2,500 allocation specifically for teleworking equipment, both hardware and software. And we've been asked, do you have to have a 50% loss to be eligible for the teleworking component? The answer is yes. You have to have a 50% loss to be eligible for the $2,500 teleworking component of the grant. Some of this is a bit of a change. We started out looking at a 25% loss. We are now at a 50% loss. For those that are at a 50% loss, we will be doling out grants, and assuming you meet all the other eligibility requirements, we'll be doling out grants up to $10,000 for the first 1,000 applications, which will be about half the grant rolling out. Then we're going to pause and see where we are, and if necessary, make some adjustments. We are also prioritizing 25%, that's $5 million for the restaurant and retail industry. Okay. All right. So let's walk through some of the documentation that we're asking for. What?
Ruth, it's Justin. I wonder if I could just point one thing out real quickly.
Welcome, Justin.
Sure.
Hi.
Good morning.
Good morning. I just want to point out that some people get confused when we use the term loss. We don't mean a loss in terms of expenses were greater than revenue. We're talking about a reduction in revenue. So when we talk about a 50% loss, we mean a 50% reduction in revenue.
Thank you. Yeah. So what we're going to do is we're going to ask you for the following financial statements. We want you to have them ready ahead of time because once you start the application, you cannot save it and go back to it. You need to have your documents ready ahead of time. Look at the sample application ahead of time so you have your answers ready. So you can sit down, fill in information, upload documents, hit submit, and we'll be able to make some decisions based on that. So we're looking for the historical information we're looking for depends upon the type of how your business is structured. We're looking for tax returns or Schedule Cs. So if you don't have your 19s filed yet, you can send us 18 and 17. If you've been in business for less than 2 years, we'll take the interim financial statements and any tax returns that you have filed. But again, we're looking to determine, this will be the base that we're looking to determine the revenue for the average revenue for the company. Then we're going to look at your current financial information. So We're highlighting and we're looking for current financial information so we can look at the revenue for the month of March and compare that to prior average revenue. So if you have interim monthly or quarterly financial statements, if you have quarterly tax sales filings, if you are an organization that has less than 5 employees, we will take your bank statements and we will use these documents to look at your revenue for the month of March, which is the month of the public health crisis that we're dealing with now, and compare that to historical averages, and that's where we'll start our calculations. In addition to the financial statements, we're going to be asking you to send us your articles of incorporation or organization if you are an entity that is set up with the state of Maryland. Sole proprietors typically don't do this, but other organizations do. So we'll be looking for these articles of incorporation primarily to help us really understand exactly the legal name of the entity, okay? If you are submitting for the telework component of the grant, it is an additional $2,500. We are looking for either an invoice or a quote for the software and hardware that you've needed to purchase or you need to purchase. In addition to the documentation, we want everybody to make sure that your business is in good standing, because when the applications come in, we will be looking to verify that your business is in good standing. If you are not in good standing, we will not be able to execute an agreement with you. We will not be able to move forward, and you will be deemed ineligible based on that alone. So please go check ahead of time. Some people have found themselves not in good standing and have been able to pretty quickly get that corrected. So we encourage you to visit that issue ahead of time. We also want you to know that this process will require you to execute a grant agreement. The agreement will be what we call a letter agreement. We hope it'll be fairly user-friendly, but we do want you to understand some of the terms and conditions that you can expect. So the county will have the right to audit the financial records of the grantee. We'll also have some reporting requirements in the agreement that you'll need to understand and abide by. We're going to ask you to return any unused funds or improperly used funds to the county. And we want all the grant recipients to certify under penalty of perjury that the application and documentation and any statements that you provide in support of the grant are true and correct. Okay. So I think I'll turn that over now to Daniel.
And thank you, Ruth, for the important clarification, but also the details that you provided as well. So in the application, and I will show you the sample application in a few minutes. Again, some of you may already have downloaded the application, because on this site where we are right now, I just highlighted the site. If you go there, there's a sample application that is available for download. Again, let me emphasize the word sample application. All applicants must fill out the online form. We're not accepting any of the sample applications. So the online form, once it goes live today, is what everyone should come and fill. So there's general business information, and then the intended use of the funds that you're applying for. You also need to provide a number of employees that you have now compared to the end of January, current payroll, compared to January. Those are, again, informational purposes for us to determine. How about if you've also, if you've also received any deferment or, or reduction in rent, you can provide that amount, the new amount that you're paying as opposed to the old amount. Again, it's important that you provide all the required field. You fill out all the required field of the application. By the way, you will not be able to go to the next page if you do not fill out the required field. I think Ruth kind of made mention of that earlier. The reason for that is because a complete application that you submit would enable Ruth and Justin and all the folks in finance to quickly process your application. So it's really for your own good that you submit a complete application, so that those who are eligible will receive a response from us as soon as we can, because we don't have a timeline yet. And as Ruth always says that, we don't have any historical records in terms of how fast we can provide this, but the goal is to do it as fast as possible. Also, you need to ensure that the documentation that Ruth just went over, so the financials and also the legal structure registrations, are all attached. Without attaching those, you would not be able to submit the application. So for our business resource partners, our chamber partners, other business groups that are on the line, if someone calls you and say, hey, I'm not able to submit the application, the few of the hints that you may look for would be incomplete required fields or not attaching the documentations that are required to submit the application. So once the application is submitted, as Ruth said, that it will be reviewed, and then from there you'll receive once it's submitted, you will actually receive an email confirmation with an application number. We ask you that you save that application number, because in case you need to inquire about your application at a reasonable amount of time, if you haven't heard from us, you can send us an email, and we have the email right here, the COVID-19, the B's COVID-19 info, the B's info COVID-19 I just highlighted at montgomerycountymd.gov. If you send an email there, again, give us a reasonable amount of time if you haven't heard from us. The goal is, again, once this goes live today, as all of you know, the demand, the word is already out there, which is great. That's exactly what we want. That's exactly what the county council wants. That's exactly what the county executive wants. So we'll see a large volume of application. And then from there, as I say, folks in finance will start to process the application. So once you submit, they will do the analysis that needs to be done in the back end, and then send you an email if you're deemed eligible. If you're not, they would also send you an email so that you would know that you're not eligible at this time. And again, when I said at this time, I know some of you chamber members and business group members and business resource partners, you've heard from some of the officials that they're thinking about other things. So while they think about that, this is what we have to do right now. If anything else happens, definitely you'll know about it. If the program is extended, definitely you'll know about it. But the goal is that once you once you're deemed eligible, you get a response, you get a grant letter. And as Ruth stated earlier, you will need to sign that grant letter with that disclosure and then send it back to us in order for you to then be able to, if you're not already registered as a vendor with the county, we'll instruct you on how to go to the CVRS system, this Central Vendor Registration System, so you can fill out your vendor registration and then provide your ACH information so that the county can deposit into your business account or into your nonprofit's account. With that being said,
well, I think we should also comment that we're anticipating the application to go live today, somewhere around 2 o'clock.
That's correct, yes.
We're still apparently working out a couple of technical issues, but we are targeting 2 o'clock. I would also share that yesterday we did some test drives, and in general, we came to the conclusion that it should take about 30 minutes or less to get to do an entire application and check it over and be comfortable with it before you hit submit. That's been a very common question. So we think it's going to take about 30 minutes, and we think the application will be online and live today and open at 2 o'clock.
And also, I think there was some concern, Ruth, about the file sizes, right? Will people be able to upload?
Yes.
Yeah.
Yes,
we tested
it. Yeah, we tested it with the county's annual financial report, what we call the CAFR, which is a huge file, multiple times, multiple files, and it worked. That part worked okay. So we felt okay about that.
All right. So
I should also say that we don't have a deadline.
That's correct.
As it stands today, we don't have a deadline to apply. We're going to leave it open. Of course, if the program becomes wildly oversubscribed, the county may have to close the program. We've certainly seen that in other jurisdictions, but we don't want to start out with a definitive deadline. So we'll navigate that as if and when we need to.
Exactly. All right. Ruth, can you see the sample application? Yep. Okay, perfect. Mm-hmm. So remember, let me highlight this word, sample, for informational purposes only. Please, if anyone reach out to you, again, our business resource partners, our chamber partners, and other business groups that are on the line, please let them know this is a sample application. They should not submit this. In fact, I got a call yesterday. Somebody said, "When can I bring it to your office?" I'm like, please don't come to our offices. We're not in the office. You need to go online and submit it. But
yeah, no hard copies.
Yeah, no hard copies at all. That is correct. So as I was saying, on the application I went through, see, this is the general business information. This is actually the application itself. The good thing is actually we really want to thank our partners, because it was your idea that for us to post this prior to, and that's the reason why we did it. And also it just made sense because it would show people all the questions that would be on the application. So we're giving you the answers before the exam, right? So again, this is a great idea it came from one of our partners. So thank you so much for that. And then again, you will get to select your business entity type. You see all those that I talked about that are eligible. As you see, I'm just going very quickly because I want to make sure we have time for question and answers as well. Again, in terms of general business information, number of employees, are they full-time, part-time, are these employees still working, and then come down to the second page. Again, we'll talk about the rent, if any has been deferred, and if payments have been waived, and then you come down. We give you information. This again is for informational purposes only. Some of the programs that have been were, because some of these programs are not even, I think some of them have been oversubscribed, but these are state and federal programs that we are encouraging all our for-profit and non-profit partners to apply for as well if they haven't applied yet. And then finally, this is the intended use. So you basically will stipulate in terms of the percentages, and you can just get that to the appropriate amount that you're requesting. And then this is if you are also requesting the additional $2,500 for teleworking hardware or software. And thank you, Ruth, for providing that update that yes, indeed, you have to be deemed eligible for the entire program in order for you to also receive the $2,500 telework grant for hardware or software. And then this is where, again, you have to basically, we provide the financials and we tell you that you need to attach those financials, and you will have a field where you can, click, and then it will open up, the attach function on your computer, so you're able to attach it from your desktop. And then, again, this is the second piece, which is, again, the articles of organization or incorporation for those entities. Sole proprietors don't need to submit this, but again, it has the attach function where you hit attach, and then you'll open up the screen for you to be able to attach from your desktop. And okay, so let me finish this real quick. So yeah, after that, basically, everything is there, and it's by typing your name and submitting this application, you certify that under the penalty of perjury, this application and all other information furnished now or in the future to Montgomery County are and shall be true and complete. And then you put in your name, that's your electronic signature, and then from there it'll allow you to submit. All right, that being said, yep. Ruth, I have a quick question for you. Sure. The financials that people are submitting, do they have to be signed? Like the tax returns, do they have to be signed?
Tax returns should be a signed copy of the tax return. Absolutely.
Okay, perfect. All right, well, go ahead. I'm turning it back over to you. Yeah,
before we go to some chat questions, I think we should tell folks that we're going to continue doing these 9 a.m. Daily webinars. They are now open to the public, although I think there are some members of the public on this morning, and I think as we go, there will be more. So we'll be able to do Q&A every day this week at 9 a.m., also on Saturday, and every day next week. So please check back with this website to get information about how to sign up for that. The chamber groups and business groups, I also sent that information out to them. so they too can share it with their communities so that we can start getting Q&A more broadly. So hopefully that'll work. So let's take some questions and see what we've got.
Sounds good.
Let's see. Good morning, Carmen. Yes, we've changed from the 25% threshold to the 50% threshold. Our individual childcare centers that have less than 100 staff members, but that are part of a larger corporation. This is a very good question. So thank you, Rena, for asking this. So if your childcare center, if the corporation that owns your childcare center is based in California, and that organization has 5,000 employees nationwide, and you are a subsidiary of that organization, you will not be eligible. If your child care center is an independently owned franchise, i.e. there is an owner, there's a business structure, it's got its own financial statements, it's registered here in the state, and they have less than 100 staff members, then yes, they would be able to apply. This is also very applicable for some of our restaurateurs. You know, if you think about a McDonald's, some of them are owned by the corporate McDonald's, they would not be eligible. But a McDonald's that's owned by a local, franchise owner, a local family, they would be eligible.
That's correct.
So great question, thank you. Carmen asked, the loss between average 2019 monthly to March. So we're gonna be taking the 24 months of information, and we will be calculating an average monthly revenue. Then we will compare that to the revenue for the month of March for 2020. And that's where we'll start to calculate the loss for the grant application. I hope that was clear. If not, let me know.
No, it was very clear. And if not,
okay.
we'll open up the mics. You want me to take the next one?
If I could just jump in for a second. That's the reason. The reason for that, Ruth, I think is worth pointing out to people. The statewide emergency was declared on March 5th. So March is the first period of the COVID emergency. So that's why we're focusing so much on that.
Okay. Thanks, Justin. Okay, let's keep on going so we can get through. You want to take this one, Daniel?
Absolutely. Yeah, sure. If we operate in multiple jurisdictions and meet the qualifications for based in Montgomery County, can we count financial losses across our footprint in what we report, or do the losses have to be from operations in Montgomery County? I'm going to let you and Justin on the line. So the idea is that if they meet the requirement for a Montgomery County based business, but they operate in other jurisdiction. Right. So in other words, the financial statement will cover all those other areas. So what do you guys think? Well, you guys know the answer. So let me.
Yeah. I'll start and I'll start with this one. So if we have an engineering firm that's based in Montgomery County and they have 50 employees, and across the river in Northern Virginia, they've got a satellite office that has 10 employees. The financial statements that we would be looking at would be for the entire organization. Clearly, the majority of its employees are in Montgomery County, and the majority of its businesses in Montgomery County. So all of its revenue will be looked at and compared to historical revenue to start calculating the grant. So I would say yes, if the organization is based in the county and it meets that qualification, then we would be looking at the financial losses across the footprint. Okay.
Sounds good.
Let me see if Justin disagrees. Do you disagree, Justin?
I don't. I just have a caveat.
Okay.
I think that, and this is not going to be applicable to many companies. It would only be applicable to sort of larger companies. But I would say that it's important that the financial statements that you're giving us, be they tax returns or otherwise, not be reconfigured for purposes of this grant. So if your normal financial statements break out, like, you do one set of reporting for your Maryland entity and another set of reporting for your Virginia entity, then you should only be using the Maryland entity for purposes of this grant, because effectively those are two separate companies. That's sort of, I would say for most smaller businesses, that's not going to be applicable. For some of the larger businesses, it absolutely could be applicable. And if someone were to rejigger their historical finances for purposes of this grant, that would be a problem.
Okay, so
otherwise, I think the way you described it is accurate.
Yeah. So, for example, I know we've got our friend Brian on here with an organization that has offices outside of Montgomery County. I think if they do all of their financial reporting in one tax return for a company that's headquartered in Montgomery County, then we would be looking at the entirety of that tax return, even if they have like a 2-person office up in Frederick County.
Right.
Okay.
Right.
All right.
That would be typical. And if that's the case, then I don't think that's a problem at all.
Okay. So let's go on. We've got.
Sure. So comparing payroll with January 2020, if January was low, but average payroll in 2019 is different, will you be comparing just 2020, January 2020, or the average payroll 2019? Some businesses have a natural low in January. So, and again, Ruth and Justin, you can correct me if I'm wrong. But common, what they're looking at is that the averages basically would be for the historical averages month after month. So the 2-year financial is so that they'll be able to calculate the averages monthly, and then the interim financials will be to see the months that we just completed before the emergency.
Right. So the reason why we're looking at 2 years of historical financial statement is to account for things like seasonality, to account for things like ebbs and flows, or maybe super high months or low months. That's why we're going to take 2 years and come up with an average. Okay, because it's actually more fair to companies, and it presents it provides a reasonable basis on which to start the calculation. Okay, and again, we're looking at the loss of revenue for the month of March 2020. Okay,
but I think the question was on the payroll, and that is not something we're not looking at a historical average on payroll. What we're doing is we're asking if, since the beginning of the COVID emergency, people have reduced their payroll expenses.
Sure.
In other words, have they let people go because of the COVID crisis? And so we're asking if they have, by how much have they reduced their payroll expenses? And the same thing with deferred rent expenses.
But Justin, for the eligibility, you're looking at the revenues, right?
Sorry?
I said for eligibility, you're looking at the revenues and not necessarily those losses in payroll. Those declining.
We're looking at both. We start with revenue. We come up with an average revenue.
We're looking at revenue for eligibility, but then we are considering other elements when it comes time to calculate the actual grant amount.
That's what I thought.
Well, no, the grant amount and eligibility are adjusted.
Okay,
to get the percentage, right? So if we come up first with an average monthly revenue, we compare the March revenue. Mm-hmm. That has our first. Then we have our first cut at what the reduction in revenue was. Right. Mm-hmm. We then adjust that figure by any reductions in payroll or reductions in rent for an adjusted revenue. And that is the basis for eligibility and for a potential disbursement.
Well, that's even more generous then, because it would show. I mean, you're reducing based on the reduction that's already been done.
That's not where it's going the other way.
Okay.
The revenue is being adjusted upwards if they've laid people off or had deferred rent expenses.
Okay. All right. Well, let's go to the next one. In terms of number of employee, oh no, okay, excuse me. This one says, what will the award amount be based on? Having a ballpark sense of potential size of grant would be helpful. So I think this is
Okay.
basically the calculations again that I think, you know, we're just going back and forth on in terms of the what would it be based on? Definitely it will be based on eligibility and then the significant loss in revenues. Is that correct?
That's correct. And as you heard, we're then going to make adjustments if there's been some rent deferment or a reduction in payroll costs. But in general, Stephanie, for the first 1,000 grants that are going to be rolling out the door, they will be up to $10,000. And in addition to that, we'll have some that will have the $2,500 teleworking component added onto that. So the most anybody is going to get right now at this point would be $12,500. That's assuming they get the total 10,000 plus the 2,500 for teleworking. And that'll be for the first 1,000 applications. And that's about the first 10 million of the grant that we have appropriated today. Okay. So another question about employees.
Mm-hmm. In terms of
apologies, I actually have to go. I have a meeting with Mike right now.
Okay,
sure.
bye, Justin.
Sorry,
Okay.
guys.
Bye.
All right.
Thank you for
So-
coming in again. We appreciate it.
Pleasure.
Yeah, thank you, Justin. So to everybody, Justin was our team member who actually put together the spreadsheet we're all going to be using to walk through this math. So he's right on top of the math here.
That is correct.
Yeah, so Carmen says, in terms of employees still working, some folks, they're hoping to bring them back. That sounds like a statement, not a question. If there's a question in there, let us know. Is broadband installation included? You were going to check on this. Yes, broadband installation is included. That's part of the quote unquote, software piece. To confirm, the threshold for the grant is now 50% loss of revenue, not 25. That is correct. The current threshold is a minimum of 50% loss of revenue. For eligible revenue documents, Schedule C for 2019 personnel requires an eligible document. Yes, if you have a Schedule C for 19, that's fine. We want 2 years. Some people haven't done their 19 taxes yet. So if you haven't, we'll take your 18 and 17. If you've done your 19s, those will be even better because they're more current for either your tax returns or your Schedule Cs if you're a sole proprietor or an independent contractor. Okay, you want to take the next one, Daniel?
Yes. Okay. If I don't have employees right now because I can't pay them, but I would open back up and hire, will this qualify? The answer to that is yes, because we're looking at the historic, in terms of revenues and the loss in those revenues. And so, yes, you'll be qualified for that. Should I say I do have employees because I will be no, you shouldn't say you will have employees if you do not have employees.
Yeah.
Okay. I'm a food truck. Principal address is in Frederick. Most of my work is in Montgomery County. How do I demonstrate this? Well, so your address definitely will be in Frederick. That's a good question. In terms of food trucks.
Yeah,
you register with the county, right? Yeah, because food trucks are. They must be registered with the county, with HHS.
But the business itself is based in Frederick, and all of the tax returns and whatnot are based in Frederick.
Yeah.
I don't think this would qualify. I don't think this one would qualify.
Yeah, you wouldn't qualify because of the business, because the principal place of business or 50% of your employees have to be in Montgomery County. 50% or more have to be in Montgomery County. So if your business is based in Frederick and let's say you don't have any employee, then no, you wouldn't be qualified. All right. The next question is confirming that we are looking at a 24-month average gross revenue for 2018 and 2019 and comparing to March. Yes, the answer to that is yes, Carmen. Can you repeat, please, if the loss a comparison of February or March financials? So, Ruth, why don't you, probably better for you to go through this, because I think if it's only February, March we're looking at, and which, so the month of March is when, based on what Justin had just clarified and Ruth has said, the month of March is what we're looking for in terms of the revenue loss in March. So the historic averages will establish a baseline, and then from there, the loss or the dip in your revenues in March is what is what basically we're looking at. Is that
Right,
correct?
right. March is the period of the public emergency.
There you go.
Okay. Do I, the owner, qualify as an employee?
Well, so when single member LLCs are eligible, so proprietors are eligible, but not as employees. So you can't say, well, I own the business and I also work for the business, even though that happens, right? So the question of owner occupied, yes, you're eligible to apply, but I don't think you can, because on the taxes, it would show the owners, right? It wouldn't. Ruth, why don't you chime in?
I think this is a tough one.
Yes.
I think for most small businesses that are going to have less than 100 employees, if you count yourself in, it's not going to make a bit of a difference whether you say we have, 6 employees or 7 employees, as long as you're below 100.
Yeah. And you're also, on payroll as well.
Yeah, I don't think it's going to get real tricky unless you're right at 100 employees. If you are, send us an email and we'll deal with you on a one-on-one basis.
Yep. So
okay.
Yeah.
We need to go on. Where does it actually say that there must be continuous evaluation? I'm missing a statement on the website or in the sample application. So, Kim, what happens is that the county council passes a bill, and then once a bill is passed, which they have done, and they have appropriated $20 million, then the executive must come up with what we call executive regulations. And in the executive regulations, this is where the executive spells out how the bill is going to be administered and defined and all the details. In this case, we have what we call emergency executive regulations, which gives us the opportunity to fine tune them, which we're probably going to need. But this is where you can find this detail about the 50% loss of revenue. We will be posting, if it's not there already, we will be posting both the bill and the executive regs to see these details. But this is where the details of how a program meets the details of the bill are spelled out. So it's the executive regs. That's where it will be.
And we'll post it today. So we'll post it together with the bill as well.
Yeah, and I think we'll be putting these details into the FAQs and further on the website. These are some of the details that have been shifting and changing.
That's correct.
Daily.
Yeah.
So bear with us on that one. Okay. I stopped working in March. I show income for March. My income varies every year depending on my business schedule. How can that be calculated? My last year I have an accident, which means I lost revenue. Hopefully you have a year before that, which shows some profit. So you've got 2 years of business activity that you could share with us. I'm guessing you are a sole proprietor and independent contractor. So the Schedule C's on your tax returns, which would demonstrate the revenue and the expenses from your business. So if we look at 2 years, hopefully that'll boost you up from your 19, which sounds like that was a very difficult year. Feel free to send us an email specifically. We'll try to address you as an individual, and we'll see if we can help sort this out for you. Okay. Does the current number of employees include those that are currently furloughed or reduced in the schedule? Yes, it does.
That's correct, because that's what we're asking you, numbers of employee prior to the emergency and then now.
Okay.
Right. Okay, the next one is applications for this program are supposed to cover different costs than applications to PPP or MD fund or Maryland fund. But given this, the confusion and delay with those funds, we won't know if we get that money or not. How can we identify or demonstrate that this program will cover different expenses under those conditions? What should we do? So, Franca, there was I know when we started earlier, there was a requirement for you to apply for those programs, but that was taken away. So it is not, we're not requiring anyone to apply for state or federal programs in order for them to be eligible for this program. Meanwhile, if you apply for this program doesn't mean you are ineligible to apply for those programs as well. What we're looking at right now is that, let's say, for example, if the PPP program covers your payroll, then the funding you get from us can cover your rent. If the state program, if you do receive money from the state and it covers your rent, then you can use the funds you receive from us from utility. That's why on the application, we have the various, in terms of use of fund percentages where you can indicate what you want to use where. So basically, based on what you know in terms of where you've applied and your ability of receiving those funds, if you've already been told that you will receive the funds, then you can basically adjust that to ensure that you indicate on our application where you will be using the funds. Ruth, is that correct? You want to add anything to that?
Yeah, I think that's fine. We have no restrictions on how you spend what you need to spend your money on. We just kind of want to know what your plans are. I think we all recognize that those plans, after you fill out the application, those plans may need to shift because of other programs and circumstances. So if I were you, I would keep very good records and receipts so that if the county comes and audits you, you can demonstrate that whatever money the county gave you went to a legitimate business expense. I think that's the bottom line.
Okay. The next question is, my business opened in September 2019. What financial forms will be used to determine eligibility for this grant? Obviously, so 2019 September, which if you file any quarterly financials, you can provide that. If you have bank statements, and if you have if you have 5 or fewer employees, you can provide your bank statement. Or any, if you have, definitely P&L statements can be also submitted as well. Those are the financial documents that you can provide to just establish in terms of monthly averages, and then to compare those monthly averages with the month of March.
Yeah. And then we're back to the food truck. Chris, send us an email on that. We need to do a little bit of digging both into the regs and into the bill and see if we can come up with a real definitive answer for you. My first inclination is that this would not be eligible for a grant because the business is the headquarters is located in Frederick County. But let us look at that. Okay, let me go back and look at that. Send us an email and we'll deal with you individually to try to help out today. Okay. All right. I think that's it on the chat. Does anybody want to unmute and ask a question or clarification?
I think one just came in. Let me just read this one real quick.
Go ahead.
You said that the first 1,000 grant limited to 10,000 apiece plus telework funds. Will later grants be larger for organization and that need more than 10,000 should they wait? But it could be that the funds will be closed if an organization wait. Go ahead, Ruth, if you want to take that one.
You're right. So the first round of grants are up to $10,000. It's not an automatic $10,000. It's up to $10,000. Okay, plus the $2,500 for teleworking. But what happens if we run through all the numbers and quite frankly, you're eligible for a full 75, which in the law that county council passed, these businesses are eligible up to $75,000. What about that extra, $65,000? I think we will be calculating and keeping track of those numbers. And this will become part of after we do the first 1,000 applications, we're going to have to sit back and look and maybe make some adjustments. So I would say the additional funds would be, is a question. It's a very valid question. I don't have a good answer for you now. We'll be getting direction from both county council and county executive about how to move forward with the funds that we have left and or if more funding will be made available. It's a big open question. If I were you, I would apply now and get what you can. If more money, more opportunity comes in, we'll be able to go back. You'll be able to submit a second request, like for example, for the month of April, something like that. We're just going to have to watch and see and work our way through. But I would not wait for an application. I would go ahead and get it in.
Yep, I completely agree.
Okay.
I have a question.
Yeah, go ahead.
The question is, with the applications, if they're approved and everything is correct, is it going to be done on a first come, first served basis?
And the answer to that is no, because again, we're looking at the eligibility criteria, and in terms of in this case, basically it'll be 50% if you've seen a 50% decline in revenues. And then also on top of that, their preferences for restaurant and retail storefront. So no, it's not. So for example, if let's say we know we're going to get a lot of application this afternoon when the form goes live, just because you are the first one to submit your application does not mean you're eligible. Right. So they have to, folks have to basically do the calculations to determine, your revenue loss and also, and other in terms of, if you're a retail storefront or a restaurant, those are part of the eligibility criteria. I think we also list the other parts of the eligibility criteria right here, which is principal place of business is Montgomery County. You have 50 or more of your employees here. And also if you have 100 or fewer employees. So those are all part of the calculations to determine eligibility.
And I apologize because I should have been more specific. I guess my main thing is, for example, for a sole proprietor or a business that's not a greater loss as a bigger business, even though they qualify in all the other categories, my concern is that the bigger business would get the money quicker or more so than a sole proprietor. That's the direction I'm asking.
Oh, no.
No.
I can tell you, I'm going to be reviewing these applications, and as the applications come in, each applicant will get an application number.
Yes,
and then there are teams of people ready to review. I'll be one of them. I know that, and they're going to be doled out as they come in to different teams. So I'm going to get a batch of 5 of them, and I'm going to go through those 5 and make decisions on them, and then I'll be given another 5. So it's not exactly on a first come, first served basis, but but they will be doled out as they come in for review and consideration.
That's correct.
But larger businesses don't have any greater opportunity than sole proprietors. This is one of the reasons why we've been trying to get information out, encouraging people to be prepared, so that we have as much of an equal playing field as possible.
Exactly.
Thank you. And then
you're welcome.
If a person, for example, because it's going to be live, and I'm a childcare provider, so that's the group I'm thinking of. If they are not filling it out correctly and they get the email that lets them know they're not eligible, but they can get the information and reapply, hopefully they'll put it within that window. I'm going to let everybody know as much as I can to have all their documentations ahead of time. But again, we know there are going to be a few people that fall into that loop to reapply the second time and get the information. But again, I know that we're playing with the time window.
Yes.
Yeah, but I think also Ruth, probably you want to talk about our business resource partners as well, who have decided to help us together with our chamber partners and other groups.
Well, you can. Go ahead.
Okay, no problem. Yeah. So, but to that point, that's why what we've done, because even the county council and the county executive were they wanted to make sure that every nonprofit, every business in the county know about the program, but also have the opportunity to apply. And we realized that there are these informal networks of minority businesses and ethnic nonprofits that are not as connected as everybody else. And so a team was put in place to ensure that we get outreach, and we've heard from many. So far we've heard back from, as I say, a lot of minority businesses, ethnic nonprofits, but also nonprofits and businesses that that are not too, they haven't been using technology as frequently as all of us have been. And so what we've done is that through the work of Ruth and many of the folks who are actually on this webinar with us, there's going to be a list right here on this homepage. I'm highlighting the homepage, and then right here where we have the sample applications and the sample flyer, this column, we're going to have a list of all these business partners that we have that have already, they've raised their hands and said, we are willing and we're ready to help, people who may have challenges in filling out the application. So some of them is probably through email, but some of them, they've provided their phone numbers for you to call if you have any problem filling out the application, and they would walk you through the application online. So
no, I'm one of them, and I thank you very much. I just know that some people, because they're not as computer savvy or business, whatever, especially for sole proprietors or people who are doing things in a little bit of different way, it may be a little more of a challenge. But thank you to all of you. You guys have been wonderful.
Thank you.
Thank you. We'll
go ahead, Ruth. I want to say we have about a few more minutes, so let's go ahead, Ruth, and then we can wrap up.
Yeah, are there any, I was just going to say, we've got about 2 minutes left. Are there any other questions?
Yeah, I have a question, just Carmen. One of them is I had a question and you didn't catch it, but I just wanted to confirm that the installation of broadband was in fact included in the technology thing. We talked about that last time, and you were going to check on that, and you told
we got back confirmation that that's okay.
Okay. And then the other one I wanted to clarify in terms of the numbers of employees that are furloughed versus actually still on in the questionnaire, and that's the thing that he was talking about earlier about it says comparing the number of employees in January versus March. And so we have some businesses where in March they still kind of hung on to the employees, but were asking them to cut back their hours or being furloughed or saying, well, I'll call you back. So when they say my March employees, do they include those furloughed and reduced time employees as part of their staff? And that goes to the number of employees January 31st full-time, part-time, and then number of employees at the date of, which is the page before that page, but we've already scrolled down. But up on top, it says a number of employees now, right? Employees at date of application. So, for example, you might have had, 10 employees in January 31st, but at the time when you're applying, 6 of those have been sent home temporarily. Do I include those 6 in there or not?
Well, I would say if an employee is furloughed, they're still an employee. They're just not getting paid or getting paid less.
Okay.
So I would still consider that an employee. If you have totally let go those 6 employees and they're filing for unemployment and you've now gone from 10 to 4.
Okay.
I think then I think you would show the 10 to 4, you would show that difference. But if they're furloughed, they're still considered an employee.
Okay. So, but
does that make, I think that sounds reasonable to you?
No, it does make perfect sense. Yes.
Okay. That's a good one for FAQs.
Yeah.
Okay. Thank you.
Sure.
All right.
Good question.
Thank you, everyone. Ruth, any final words from you? We have
I thank you all for participating, asking questions, for helping us to prepare and sharing information with all your communities. Again, we're looking for the application to go live today at 2 o'clock. So I would encourage you to spend the rest of your morning getting ready and preparing, and hopefully we will all get through this reasonably well. Thank you so much for participating.
All right, well, thank you, everyone. And again, as Ruth said, we're going to continue our Q&A sessions throughout this week and also going into next week. So please, these Q&A sessions are now going to be open to the public, so you can invite other people to join us. And with that being said, we will go ahead and end this session. Thank you, everyone.
Thank you.